One firm dared to dream bigger, challenge limits, and change transportation as we know it in a world where innovation drives us ahead. However, what occurs when the path to achievement encounters a few unanticipated detours? We explore the fascinating story of Tesla today, a firm that has revolutionized the financial market in addition to our highways. We'll investigate the startling reality of its most recent exhilarating experience. We are delving deeply into the thrilling world of Tesla's stock decline, revealing the unseen elements, solving the puzzles of the market, and revealing the untold tales that have contributed to this crucial turning point. Come along with us as we sift through the marketing and uncover the realities that even the strongest can encounter. But first, be sure to like and subscribe to Tesla Stock News before we go any further. We can now move on with the video after saying and doing that. As a result, some investors are changing their strategies these days and diverting their funds away from the stock market and into bonds and cash. As you can see, Bank of America strategists have been investigating this, and our good friend Jared Blickery from Yahoo Finance is present with us at the New York Stock Exchange to provide us with more information. This week, at least in terms of inflows, not many people are looking at stocks, but cash money market funds are continuing to have robust inflows. Quite substantial inflows thus far this quarter. $145 billion in cash. This week's flows are more substantial than those of the previous quarter, according to Michael Hartnett, B of A Treasury bonds. By the way, have seen substantial inflows of $127 billion year to date and are expected to reach a record annualizing amount of $206 billion. Healthcare appears to be getting some attention when it comes to money flow, but this week, at least, there isn't much enthusiasm for stocks. When it comes to inflows, cash money market funds are the true stars. They are making an incredible $145 billion this quarter, which is a substantial amount. Additionally, Michael Hartnett from B of A has been discussing the money flow game. The inflows this week appear to be happening much more quickly than they did last quarter. Not to be overlooked is the arrival of treasuries, those dependable government bonds. With a substantial inflow of $127 billion so far this year, they're taking center stage. At current pace, the entire project might potentially reach a record-breaking $206 billion. Now, let's focus on Tesla, the star of the show. A number of factors, including the company's Q3 earnings, interest rates set by the Federal Reserve, the excitement surrounding the Cybertruck, and of course the EV revolution, are influencing the stock performance of Tesla. Let us concentrate on the final point, which is the significant transformation in the transportation sector due to the move towards electric vehicles. It's a complete metamorphosis, my friend, not simply a passing trend. Just consider this. Electric automobiles are positioning themselves to surpass the reliable internal combustion engine vehicles. Why? Well, it's a combination of factors, including our shifting perspectives as customers, the amazing technological developments, and the reduced environmental impact. All of this points to a rapid advancement in the field of electric vehicles. Regarding Tesla's ride, in the first half of the year, those cars were selling like hotcakes. Their clever pricing techniques have contributed to some of their success. We're all interested to watch how those cars continue to sell as we head into the later half of the year and the interest rates decide to take a break. You know, Tesla has been able to compete by offering a competitive premium pricing, and as they have increased their output, they have taken a substantial share of the market. In the commercial sector, however, it is sometimes necessary to gently prod the market to accept novel ideas. There has been movement in the car market lately, and it appears that price reductions may be tapering down. It appears as though they are veering away from that assertive strategy. Experts predict that those price reductions are almost complete. The talk these days about who will have the most market share is what's grabbing my attention. There's a lot of activity going on here. In terms of technology and pricing, Tesla has been a real hustler, staying ahead of the curve and winning market share left and right. They are a force to be reckoned with in the market because of their significant advantages in terms of cost reductions, production, and vehicle design. Furthermore, they have the opportunity to stir things up with more price reductions if necessary. You can be certain that they have something special planned for it, even though it may not take center stage for the remainder of the year. They are not your typical auto manufacturer. Their stock has recently been taking center stage, and they have been seeing rapid development. This company has been setting record after record, and they have more in the works. We might soon witness that stock price crash if they continue to strike the correct notes. Now, Tesla has long been a prominent figure in the automotive industry. People are curious in the potential earnings from investing in this automaker. It's a gamble. Certain market variables have the ability to predict future stock values with a degree of puppetry. Future gazing, we're in full shift mode with regard to automobiles. Major cities and even entire nations are announcing that in a decade or two, they will be bidding adieu to vehicles with traditional combustion engines. That's really stepping up the electric vehicle game. Additionally, governments all over the world are using tax breaks, rebates, and lowered registration costs to wave their magic wands and make electric cars more accessible. It's as though they're giving EVs the red carpet treatment. In this EV circus, Tesla appears to be the heavyweight champion. Imagine the money that will come in if they can seize the initiative and put half of all EVs on the road in the future. And that only relates to vehicles. They don't even discuss other secrets they may have. I assure you that Tesla is the only player with a chance to win this. And let us acknowledge those who deserve it. Tesla has been the EV revolution's rock star. The innovative technology of EVs combined with Elon Musk's allure have people talking about them like never before. Do you recall the period when EV charging was fraught with problems? Fortunately, they have been investing a significant amount of money to increase the charging network, so it is no longer as problematic. In addition, as more EVs are driven, production costs are decreasing, which is good news for consumers concerned about cost. Let's return our attention to Tesla's financial runway now. They made a cool $18.8 billion in sales in the first quarter of last year, a significant 42% increase over the same period the previous year. Yes, they had a slight decline in the second quarter as a result of some delivery hiccups, but even in that regard, their production output was far higher than that of their rivals. They significantly improved their car delivery business in 2021, up 81%. Now, let's calculate some figures. Consider a scenario in which Tesla achieves around half of Musk's projected 20 million vehicles by 2030. In such scenario, a stock price of almost $3,120 per share might be in store. If the average price of a Tesla vehicle in 2030 is $60,000, the company might make a tidy $60 billion from sales. Once you factor in 15% from other exciting areas such as robots and batteries, you have an impressive $90 billion. After adding up all of their sources of income, some careful math puts the total at $3,120. Hold on to your hats, folks. If Musk's ambitious plan materializes and Tesla sells about 20 million cars by 2030, its gross revenue may soar to an incredible $1.56 trillion. Yes, you did indeed hear that. Additionally, assuming their non-automotive businesses generate roughly 30% of that revenue, their stock price might soar to $11,700 per share. Indeed, weirder things have happened, even though it sounds like a fairy tale land. But remember, they are all only informed assumptions. Tesla has a few exciting things planned, like the Cybertruck hysteria, the Q3 earnings, and possibly more benevolent interest rates. We might be witnessing a golden age of investing if these conditions are met. Hey though, always finish your assignment. Do research, 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 and never forget that your personal expectations and boundaries count. Let's hear your ideas before we conclude. What do you think about Tesla's involvement in the revolution of electric vehicles? Do you picture them coasting to dominance, or are there obstacles in their path? Regarding their stock prospects, are you excited or are you hesitant? What is your most ambitious forecast for Tesla's future, by the way? Please share your thoughts in the section below. If you liked this in-depth look, don't forget to hit the like button. If you'd like to remain up to date on all things Tesla, make sure to subscribe to Tesla Stock News and turn on the notification bell.